Three, two, one, one, two, three.
Welcome back to QAV TK. We're recording this on the 4th of February 2025, the day after the US implemented tariffs and then unimplemented them immediately. What a
Did they
crazy.
really implement? Did they implement? Really?
What it's as we were just saying off air, it's Trump whack-a-mole and just collapsed our market by whatever it was, $100
2%.
billion
Yeah.
yesterday. And I haven't checked today. I think it was back this morning when I had a look. I haven't had a look since I went to training, but
Not completely back, but it's back a little bit.
right.
Yeah.
Yeah. Oh no, it's only like not even halfway back to where it
Hmm.
was. Anyway, how are you, TK?
Very well. Enjoying watching Justin Trudeau earnestly try and talk to the American people about tariffs. The issue isn't tariffs, Justin. Laugh it off, man. Go and find out what Trump really wants.
Well, he's out of a job anyway, isn't he?
Yeah,
Trudeau.
he's already resigned. Yep.
Mm.
Yeah.
Speaking of resignations, I just saw in the news as I was setting up that the CEO of Resolute Mining has resigned.
Okay.
Okay.
Okay. Yeah. Put a tariff on it.
I don't know. He gets held in detention in Mali for a week and he resigns. Like,
No, it's not. Was he? Was he? I thought it was West African Resources.
no, Resolute Mining.
Oh, it was
Yeah.
Resolute. Okay.
Yeah.
Ah,
Terry Holohan has resigned following his detention in Mali. So I can understand that.
is he now working for the government of Mali?
Doesn't say.
Okay.
But their share price collapsed again from 42 cents down to 37 cents. Um, so fortunately, we were out of it already. But, go back to November, it was trading up around 76 cents. And
Yeah.
then it didn't recover from that. And now it's taken another hit. So, yeah, I hope
Good thing we
everyone's
got
out of
out.
Resolute Mining. Yeah, I
The
hope
first,
everyone got out.
as Phil Muscatello says, the first cut is the cheapest.
Oh, yeah. There you go. Good one, Phil. So, what do you want to talk about today, TK?
Well, I thought we'd turn this into the tariff show, shall we? Uh, I mean, this is the sign of a frothy market. Valuations are up, so any sort of trembles in the international market's going to take 1 or 2% off our share market for sure. So that's just take that as granted. Don't get too upset. Um, I I'm not a fan of tariffs. I mean, if we talk about tariffs, forget about Trump and just talk about why tariffs are good or bad. I think they're bad in general. And I always one of the only things that I've ever heard that made sense from an economist is is known as the Ricardo effect, which basically means that countries should
Gonna have to
stick to their
Ricky Ricardo from I Love Lucy.
no, no,
No,
different Ricardo.
no.
The country should concentrate on what they do best. So in Australia's case, it's mining. We should make mining a key industry and do whatever we can to sell ore overseas because that's the best benefit for Australia in terms of its utilising its resources. Instead of saying that, well, we want to also be a manufacturing powerhouse, we also want to be a, you know, accounting powerhouse or an AI powerhouse or a tech powerhouse and putting lots of effort and resources into those things when really we can't compete with the real powerhouses in different countries overseas. So the Ricardo model, or the Ricardo effect, it's sometimes called, just says stick to your knitting and then trade what you do best with somebody else for what they do best. And it actually is the most efficient way of allocating resources around the world. And I think that's pretty true. And I always come back to the simple analogy. If I was a business owner, like a coffee store owner, I'm not going to do my own books. I'm not going to, I mean, potentially I can do my own IT, put up my own web presence, et cetera, et cetera. I'm going to outsource those tasks, perhaps marketing, um, any sort of HR advice I need, legal advice that I need. I'm not going to train as a lawyer so I can run my coffee shop and handle all my own legal cases. I'm going to get advice. And that's the same sort of thing. You stick to brewing beans. That's what you do best, and you sell that in the marketplace, and then you buy the other services from the experts in those fields that concentrate on doing that. And that's a much better allocation of time and effort and resources than trying to establish non-competitive industries. And we kind of found that out in Australia anyway, through the car industries, um, where we had big tariffs to support local manufacturing, and eventually that becomes kind of perverse because you'd have to argue that Ford's and GM's main business competency wasn't making cars, it was seeking assistance from governments and threatening to leave a government if they didn't receive an appropriate level of government funding. And, when their bluff was called, they left. And as I was saying to you off air, I'm in the market for a small car for Jenny, and to be shared by Alex when she learns to drive eventually. But
Alex doesn't drive.
Nope.
She's like 25.
Yeah. Oh, Jenny doesn't drive either. She hasn't driven in 10 years, but I'm kind of forcing her to make her own way to Melbourne. Um, anyway, my point is, like, I was out looking at cars yesterday or the day before, and the car you can buy now, brand new for 20, 25 grand, is better, if not the equal of a car you could buy from GM or Ford for twice that cost 10 years ago. So, I think the Ricardo effect is alive and well in the car industry now, and we're seeing the benefits of it, really. Now, look, there are some caveats to it, and I know people will say, but we can't let everything go overseas because if there's a war or there's an embargo, we won't get access to manufactured goods or particular food stuffs or oil or whatever. And you can take very surgical and specific ways to protect that, but the overall blunt instrument of using a tariff doesn't usually work. So in my heart of hearts, I think Trump knows that. He's just trying to find a way that he can gain leverage on other countries to negotiate an outcome that he wants in some other issue. So that's what I think is going on. May affect the Australian market. I could be wrong in that if there's a big tariff put on China and China stops, manufacturing as much and therefore stops using our iron ore as much, et cetera, it'll have flow-on effects to us, but we haven't seen that yet. And we didn't see it last time in the Trump presidency. And he learnt last time that when he did put tariffs on, the people started revolting. They started saying, hey, we're sick of paying more for these goods. This is not working, fella. And he quickly rescinded them after, a short period of time. So this isn't about tariffs. This is about leverage and negotiations, and people need to wake up to that.
He rescinded the tariffs? I thought they were still on when Biden took over, and then Biden increased them.
No, possibly. But no, I'm sure that a lot of them that were put on were taken off soon after they were put on.
Well, it's, who knows what goes on in the mind of Trump. I don't think he thinks about it much more than what's going to grab headlines for the day and make him look tough and keeping the media distracted while he and his friends are doing something behind the scenes to make.
That's the other thing too, is that if tariffs do go on and he raises revenue, he'll drop taxes, but it won't be for the people paying for the tariffs. It'll be for him and his cronies. Yeah.
I saw an economist talking on video yesterday. I think it was a Wall Street Journal video. American economist was talking about tariffs that were put on Chinese washing machines. I think this was during the Trump's first term. And he said, people think that if you put tariffs on foreign imports like washing machines, that the domestic manufacturers will leave their prices where they are, but that doesn't work. He said, so if you're paying like $200 for washing machines, then you put 100% tariffs on the Chinese imports, so they go from 200 to 400. The domestic manufacturers don't leave their prices at 200. They go, oh, we can go up to 300, 350
Mm.
now and
Yeah.
still be the cheapest in the market. So prices go up across the board, which consumers have to pay for. He said, but then prices on clothes dryers also went up, even though they weren't part of the tariffs, because there's the expectation that they're roughly priced about the same. So the prices are up.
Yeah.
He said, so the US Treasury gained something like $85 million a year from tariffs on Chinese washing machines. But economists estimated that American consumers paid an extra $1.8 billion for, for washing machines and clothes dryers as a result of the tariff. So
Well, that's a
it's
good point. I
anyway.
mean, yeah. So, the tariff, if it's set like that, kills the Chinese exporter, which means no tariffs are levied.
Well, yeah, in
And
theory,
the
yeah,
American manufacturer only has to beat the price by $10 to get the business, so they put it up.
yeah.
And also, too, they probably like it's very difficult for a manufacturing plant to double capacity tomorrow, like when the tariff is put on,
Mm,
especially if it's done capriciously and there's no forward planning or notice of it.
mm,
So they can't meet
mm,
demand. So the way you solve that equation is you put your price up.
mm.
Mm.
Well, anyway, from an investing perspective, it's chaos, but we
Yeah.
just stick to our knitting and do what we can do. What else have you got on your list of talking points? You
So do you
pulled
want me to do a
pork?
pulled pork?
Who are you doing today?
Aurelia Metals, AMI, another gold
Mm,
miner, predominantly.
mm,
So
mm.
also mines copper and silver and zinc and a bit of lead. Um, I I had a look at what company on the buy list to do a pulled pork on and couldn't find one that wasn't going backwards when I had a look last night and this morning. But
Yeah.
Aurelia seems to have recovered back to where it was prior to the talk of tariffs in the US. And it's a gold miner, so gold's seen as a safe haven asset. So you'd expect the gold miners not to be retreating as much as the rest of the market. Uh, I did a pulled pork on the stock, I'm going to say about 3 years ago, maybe 4 years ago. It's been on and off our buy list for a long time. Um, and after I did the pulled pork, of course, it dropped in value. And I actually owned it and had to sell.
Hmm.
But the interesting thing about that pulled pork, I think it was the first occurrence of our discussions on which commodity to use when using a commodity graph to track a stock, because Aurelia does mine a number of different metals. And it's not unusual to see a gold miner also mine copper, which oftentimes occurs at the same place under the ground. But yeah, I checked again with the annual report, most recent annual report, and still more than half of the revenues for Aurelia come from gold. So we'll stick with using the gold commodity chart as our underlying buy and sell trigger for the company. Um, who is Aurelia Metals? Well, from their own results announcement a couple of years ago, they are an Australian gold and base metals mining and exploration company. And I think base metals is how they group copper, lead, zinc, and silver. Um, Aurelia owns and operates 3 underground mines and processing facilities in New South Wales. One's called the Peak Mine, which mines gold, lead, zinc, copper, and silver. They also have the Hera Mine, which mines gold, lead, zinc, and silver, no copper. And they acquired the Dargues Mine, Dargues mine, which predominantly has gold. Aurelia's highly prospective tenement holdings enable the company to advance targeted exploration and evaluation activities within proximity of Aurelia-owned infrastructure. Our preeminent near-term development projects include the Federation Project, now a mine, located near the Hera Mine, and Great Cobar, located in the vicinity of the Peak Mine, which is copper and gold. Aurelia's objective is to maximize returns from its producing assets while advancing its exploration and development projects to sustain and grow the business in the long term. And that last sentence is probably the key one here. So they have a history. They've been going since 2009 in the Cobar region of New South Wales, so kind of the Bathurst area and a bit further west of New South Wales. Uh, They have a history of buying mines or starting mines that have a short life left in them or a short life expectancy, but before they close them down, they drill like buggery and find another mine in the same area. So it's basically using the mine life of the mine that's operating to fund the exploration to get a hopefully a bigger and better deposit underway. They started in 2009 with the Hera mine. The Hera mine was actually shut last year or in late 2023. So that kind of gives you an idea of their life cycle. And some people will find that to be risky, and I guess it is. Um, and they look for mines with long life cycles. So if you're in that kind of camp, then Aurelia may not be for you. Um, they found in the area the Federation deposit, and they've now developed that into a mine. And they also, in 2020, acquired the Dargues mine from a company called Diversified Minerals. Dargues gave them a bit of an indigestion problem. And if you look at the share price graph, it went from a high in about 47 cents in 2022 to a low of 9 cents in September 2023. And that crash began in 2022 with the release of their results, which showed a non-cash write-off of about 95 million after tax, resulting in a statutory loss of 81 million after tax that year. And the write-down was due to the acquisition of Dargues mine not working out as planned. I guess probably amongst a few other things, but that was mainly it. Notwithstanding that impairment charge, the underlying profit decreased, and that was largely due to lower ore grades, increasing the cost of sales. So basically, they bought a mine. They thought it was going to have a certain concentrate of gold. It didn't. It had less as it continued to be mined, and they not only made less money, but were forced to write down the cost of acquiring that mine. So that's, I guess, one of the risks of what they're doing. It's that kind of necessitated a change in management, and in 2023, new management came in. They undertook various projects to reduce costs in the business and get the finances under control. Debt was paid down to zero, and the new incoming CEO secured a $100 million funding facility, which allowed them to develop the Federation mine. And stock analysts kind of like that. And so they started increasing their consensus forecasts, and now the stock is being re-rated. I did the analysis at, I think, 19 cents a share. So it's up from 7 to 19 cents in the last 12 months or so, which is, nearly tripling, or yeah, almost a tripling in value. But all these things are largely on the strength of what's going to happen. What is going to happen with the Federation mine, what's going to happen with the drilling, the resources. So this is almost like a story stock, which we try and avoid. I guess underpinned by the fact that what they are doing throws off lots of cash, even though I think the latest results in 2024 showed they were still at a slight loss in terms of profit after cash and profit after tax, sorry. They are throwing off lots of cash, operating cash flow. So that's good. And that's funding their exploration. So they seem to have that working well for them. If I look at the numbers, the ADT for this stock is $238,000 a day. So it'll suit a lot of investors, particularly with portfolios up to about 750,000 or so. Stock price, as I said before, I'm using for analysis of 19 cents, and it did drop overnight, but it's almost back to that price today. Last time I checked before we started recording. But that 19 cents is only 76% of the consensus price target. So I think the consensus price from memory was around 26 cents. So the analysts are buying into the story and like what they're seeing and saying the stock is underpriced. I can't calculate IV1 because we're not getting a positive earnings per share, but IV2, the forecast earnings per share is 19 cents, which is where the price trades now. So it's certainly meeting our value metric from that point of view, and it's also meeting it from a book value point of view. So net equity per share and net tangible assets for this company are both around 19 cents. So we can buy it for a reasonable price. The question is, is it without risk? And there are risks because they've got to do what they say they do, basically. The mitigation of that risk is that there's a lot of cash behind them and no debt. So that's good. Stock Doctor Financial Health is early warning, and the trend is steady. So we can't score them for financial health. Stockopedia rank it as 89 in terms of quality and given an F score of 5 out of 9. So kind of similar financial health rating in Stockopedia for that. There's no dividend being paid, so we can't score it for that. Getting back to Stockopedia, the overall ranking for this company is 99. So it's very high up on the Stockopedia rank based on a high score for momentum. So they're kind of tracking the recovery in the share price over the last 12 months and boosting its score because of that. PE ratio is NA, so we give it a score of 0. We can't score it based on that. However, the prop cap is only just over 3 times, 3.1 times. So I think what everyone's seeing is that the losses after NPAT are almost back to 0 and will probably go positive next time they report. And the forecast earnings per share is to increase by 700%. So if the forecasts come off, then that's going to be a good thing. But I can't score it based on that forecast earnings per share because we don't have a PE ratio to compare it to, and we check for growth over PE. There's no owner-founder in the company. However, there is a shareholder sitting on the board owning 19.88%, a chap by the name of Franklin or Lynn Brazil, I think he pronounces it, Queensland agriculturalist. So I'm not sure what his knowledge of mining is, but one of the things I do note is that the Cobar region is smack bang in the middle of farming districts in New South Wales, so perhaps he's come across it from that perspective. But yeah, I give it a score of 2 because there's a director with skin in the game. We score it for a recent 3-point trend line uptrend. Equity has not been consistently increasing, so no score there. So total quality score of 11 out of 15 or 73% and a QAV score of 0.23. So pretty high up on our buy list, probably the highest gold miner on our buy list. And gold is having its time in the cycle where it's hitting new records almost every day. So being a gold miner is not a bad thing. What are the risks? And I'll read again from their annual report. They call it the replacement of depleted reserves risk. And they say the company must continually replace reserves depleted by production to maintain production levels over the long term. Reserves can be replaced by expanding known ore bodies, locating new deposits, acquiring new assets, or achieving high levels of conversions from resource to reserve with improvement in production costs. Exploration is highly speculative in nature, and as such, the company's exploration projects involve many risks and can often be unsuccessful. Once a prospect with mineralisation is discovered, it may take several years from the initial discovery phase until production is possible. As a result, there is no assurance that current or future exploration programs will be successful. There is a risk that depletion of reserves will not be offset by discoveries or acquisitions, or that divestment of assets will lead to lower reserve bases. The company's mineral base may decline if reserves are mined without adequate replacement, and the company may not be able to sustain production beyond the current mine life based on current production rates. So that's a pretty good summary of what happened to them in 2022, which led to replacement of the management team, and hopefully they got the lesson and 2023 looked better for them. But yeah, that's the case with this company. They're kind of on this treadmill of buying and developing short-term mine leases, getting them to production, bringing in cash while quickly trying to find extensions or new companies to acquire. What else can I say? One thing to call out to people is that the price is currently trading 3 cents above the current sell price. So just be aware of that. It won't take much to turn the stock into a sell. So be careful of that. On the upside, though, as I said, gold price is doing really well. One of the issues, though, with this company is its all-in sustainable costs. So the cost of producing the oil, or under accepted accounting standards, is currently sitting at $2,035 Australian, which is down from 2,300 the prior year. So that's a good thing. But $2,000 is, even though it's providing a good, healthy margin now, is not the lowest of the cost curve. So if the gold, when and if the gold price does decline, companies like this will be the first ones under pressure. It'll be the ones with all-in costs more like 1,500, 1,600 bucks an ounce that will last longer and be thought of better in the market because of their higher margins than a company like this. So the gold price being up is an upside. If it keeps going up, it's just throwing cash at a business like this because it's all margin for no extra work. But when it does turn down, it'll become a risk. So yeah, have a look at Aurelia Metals. It's been on our buy list for a while.
And in fact, I added it to one of the light portfolios in April 2024 at 16 cents, currently at 19 cents, according to my spreadsheet anyway. So it's up about 21% since then. It's been good.
Mm-hmm.
But my chart says the 3PTL is 18 cents. So it's,
Oh, does it?
yeah,
Yeah.
that's from when I
That's
ran it
very
on
close. Might have a
Friday.
look
So
at
it is
mine.
very close.
Yeah,
I
okay.
found an article about Lynn Brazil,
Yep.
which is interesting. Let me see if I can. Where the hell did that go? Oh, there it is. This is from graincentral.com, June 2022. Southern Queensland mixed farmer, investor, and philanthropist Franklin Lynn Brazil said he never thought of himself as the kind of bloke to become a member of the Order of Australia. That's an AM. He puts the AM in AMI. He received the title as part of the Queen's Birthday 2022 honours list. You got one of those yet, Tony?
No, I must have got lost in the mail.
I'll
Takes
have
a
to
while
get
for the
onto
mail to
that.
reach Cape Shank. Yeah.
For
I
his
am an
service.
ordinary, I know I am an ordinary Australian male, though, is what my
Oh,
friends
right,
says.
right. I don't think you're ordinary, Tony. Not at all. For his service to medical research and to agriculture. It is a great honour, but now I'm going to have to wear a tie, Mr. Brazil said. Never saw myself in the mould of whatever an AM is, and I never envisaged that I would get one. You go and do what you have to do, and this is just something that comes from it. Through hard work, good planning, and decision making, and rarely turning down an opportunity, Mr. Brazil progressed from a small poultry farm on the Queensland New South Wales border to owning 4 cropping properties at Brookstead and 2 cattle operations at Goondiwindi. He can also boast multiple stock market investment successes and the creation of the Brazil Family Foundation, which contributes to many medical and scientific research organisations. Self-described as not the typical farmer, Mr. Brazil said he has always had a passion for agriculture and rural life. Farming is a very satisfying occupation because it is full of challenges. Challenges to do it better next year, to do as well as your neighbours, and the satisfaction that you believe you can beat the challenge.
Oh,
So there
he's
you
competitive.
go.
Yeah.
Yes.
Probably not a bad addition to the board too, given that these mines operate in farming areas, and there'll always be contention for water rights, water usage. There'll be contention for whether the agricultural use of the land is being affected by mining, all that kind of stuff. So couldn't hurt to have a pastoralist on the board.
And he has been involved in the Grains Research and Development Corporation, the Queensland Farmers Federation, Queensland Irrigators Council, and the Grains and Cropping Research Development Trust. One thing leads to another, and if you're around, people tend to ask you to become involved with things, he said. His wife, Bobby, also a recipient of the Order of Australia. She got an AO, who often took a leading role in. She was serving as the University of Southern Queensland Chancellor from
Mm.
2006 to 2014, the chair of the Australian Land Care Council, and a director of the Condamine Catchment Management Association. So they're busy, busy people.
Yeah.
Um, Quote
Hopefully
from
they
him
have
here.
time for board meetings of AMI.
The The big future is in pulse foods. We'll be coming into a wider range of foods and ways to use it because everyone wants variation. No one drinks only 4X beer anymore. The meat made from pulses, plant-based meat, there will be a future in that, he said. So there you go. Looking
I'm not sure
ahead.
about that. There's a lot of
Really?
a lot of companies that were set up to make plant-based meat have all closed down again. I don't think it really took
Really?
off. Yeah.
Yeah. Well, I do think it's probably going to kick off at some point, but
Well,
I
it's
don't know.
kicked off
Whatever.
once, hasn't kicked on.
Yeah.
And under Trump's America, I can't see it kicking on over there. Would you like a plant-based burger, Mr. President?
Yeah. Anywho, thank you for that, Tony. And with that,
Yeah. Yeah, people better think up some questions for next week. Otherwise we'll start walking out all our dad jokes.
doing stand-up routines.
Yeah.
Quite have a good week, Tony.
Yep. Thank you, Care. You too.